So the bad news is that everyone is subject to taxes on gifts they make during life, as well as being subject to estate taxes for transfers made at death. But the good news is that there are many ways to preclude these taxes, especially when you plan ahead. We will discuss a few of those methods here. First of all, the most useful and popular way to delay transfer taxes is available on transfers between a husband and a wife. That's because married couples are not subject to estate and gift taxes on transfers between them, since there's a 100% marital deduction that prevents taxation. That means that a husband and wife can transfer however much they want between the two of them, and that amount, no matter how large, will not be taxable. But what about transfers between everyone else? Well, besides transfers made between a husband and wife, the biggest freebie that everyone is allowed is something known as the Unified Credit. And the Unified Credit actually shielded a transfer of $1 million from gift tax in 2010. While the amount of the credit the government allows bounces around a bit, based on the past, we can be reasonably sure that the government will continue to permit transfers to anyone during their lifetime of $1 million free from gift taxes. So right away we know that everyone can give away up to $1 million and there will be absolutely no need to pay transfer taxes. But what if instead you pass away and leave your estate to your heirs? What happens then? Good question. It's a question that's a bit difficult to answer with complete certainty because this area of the law always seems to be in a state of flux. At the time this video was made, the estate tax exemption was slated to only be $1 million in 2011. In such circumstance, whether you give away your assets during life or at death, only $1 million will be shielded from transfer taxes. But stay tuned, because Congress always seems to be tinkering with this number. By the way, it's also important to point out that the gift and estate tax system is unified, which means if you give away $1 million during life, that amount is subtracted from the amount you were allowed to leave tax-free at death. In other words, you can't leave both $1 million during life and also another $1 million at death tax-free. It is an either-or proposition. So far in this video we discussed the unlimited marital deduction as well as the lifetime gift and estate tax exclusions. For more basic ways to reduce transfer taxes, please see the next video.